Iran-US talks in Tbilisi is Murman Margvelashvili, Director of Energy Studies at Ilia State University. Welcome to the program. Now, crude is back below $63. Are traders too optimistic about a US-Iran deal given the nuclear standoff?
Well, actually, we need to realize that the price changes are conditioned by many different factors. First of all, the market is oversupplied by about 3 million barrels per day, which has its downward effect. Also, another point is that the price had already factored in the risk of US and Iran tensions. Therefore, as I understand, the markets consider that they prolong the negotiations. The agreement to continue negotiations in 2 days from now, that is a positive signal, and it played downward effect on the prices.
Right, and India is reportedly halting Russian oil imports. Does that essentially leave millions of barrels stranded without a buyer?
Well, that's a pretty significant event that happened on Saturday. Iran seized 3 tankers of Shadow Fleet that were delivering oil. Iran is consuming, India was consuming about 200,000 to 300,000 barrels a day. So it is about 90% of Iranian export that now will remain without a customer, and it will have to find the way to other markets. Most probably that will be China, who continues to buy Iranian oil, but that will give China a big leverage against Iran. So that event is kind of diminishing the negotiating position of Iran vis-à-vis America in the talks that are going to resume soon.
And we have a critical OPEC report due this week. Will the cartel be forced to cut production again to defend the price?
Well, OPEC and OPEC Plus meeting is scheduled in the 1st of March. They had a meeting on February 1st, and the decision was to stop increase in supply. With this oversupplied market and the situation in Iran, I doubt that there will be immediate decisions right now in view of uncertainty and volatility related to the negotiations between Iran and United States, because many things can happen there if the negotiations do not end up with any deal that may have a negative impact. It will increase the oil prices. Therefore, OPEC may not have that much intent to reduce and to cut off the production and supply to the world markets.
Right, and tensions may be easing between the US and Iran, but uranium enrichment continues. Is the market pricing in a risk premium or ignoring this danger?
Enrichment continuation is not by itself a factor for oil markets. It is probably a secondary indication and depends on how United States will deal with this continuation of oil supplies. Also, we really do not know whether it is a negotiating position at this point, or it is a final decision. So I think that it's better to wait for the continuation of negotiations, because there are factors that may increase the demand, and hopefully it will not end up in blocking the Strait of Hormuz, because the worst scenario is probably that that Iran is controlling the Strait of Hormuz, where about 20% of global oil supplies is going through, and creating obstacles for that flow can have a pretty negative effect on oil prices. So right now, everything depends on the outcome of negotiations and how it will end up.
All right, we'll leave it there for now. Murman Margvelashvili, Director of Energy Studies at Ilia State University. Great to have your analysis. Thank you.